The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody. How you all doing? Good evening. This is Neil Green again with you on this weekly webinar. Just want to check that everybody can see my screen. You're supposed to see our homepage at itrader.com, and of course, hear my voice. You have a chat window, so if you have any questions during the webinar, after the webinar, you're more than welcome to ask me. Everybody can see the screen, hear my voice. Just technical check. Just write me down on the chat window so I could start. Just to give you some information, this is a weekly webinar. It's a free service that we give you as our traders. Neil Green been doing it, I think, for 2 or 3 years right now. Every week on Tuesday, the same hour at 6 p.m. GMT time. Everybody can hear me? Can I start? Are we good? All right. Okay, guys. So, okay, let's start. So a lot of you asked me to talk about fundamental trading. So I've decided to do it today. We have 2 ways to analyze the market. Okay, the first one is technically analyze the market. Okay, technical, what we call technical trading. And the other way to trade, to analyze the market is fundamental. All right, so we have fundamental analysis and technical analysis. A professional trader is one that knows how to combine both in order to make decisions. Today we're going to put our focus on fundamental trading. Okay, where do we check scheduled events? Okay, things that affect the market. How do we know how to recognize these events or the fundamental events that affect the market strongly? And what assets should we trade? What direction should we take it? And so on and so on. I'll try to answer all your questions about fundamental trading. Okay, so let's start. Okay, fundamental trading. Everybody's okay? Okay, let's go. All right. So when we talk about fundamental trading is a huge part of trading. All right. Actually, the biggest movements. Okay, we as traders, what we look for is volatility. Okay, we need movement of the market. We need movement of the prices in order to try to make some revenue, in order to try to make some profits. What we need is the market to move on our direction, and we need to protect ourselves. This is why we have protecting orders such as stop loss and take profit, in order to put borders to the trade. Okay, we don't want to take a lot of risk. On the other hand, we want to know when to get off the trade. This is, professional trader is one that knows that whenever you have a plus, right, whenever you're in the money, whenever the trade is going your way, it's a very important thing to know when to get off the trade. Okay, because the market is very volatile. If you trade on a certain asset, let's say, for example, you trade on a pair of currencies, and I'm sure it happened to you many, many times before. I'm just saying it in order for you, not to make any mistakes in the future. Even if you trade fundamental events, when usually, big fundamental events has very strong impact on certain assets, and we're going to talk about how to recognize the assets today. Affects the price of the asset strongly, makes opportunities, but we have to know, okay, and this is where the technical analysis comes, combining with the fundamental analysis, to know when to get off the trade, get out of the trade, eventually with profit. So fundamental trading is a huge part, as we say, of trading. Traders can prepare for the reports and publication in advance, okay? Or the idea is to take advantage of new market information, and fundamental events generate big swings but deserve special preparation. Where do we find them? So you have many ways. You can go on our website, go to trading tools, and then you have an economic calendar. You can use investing.com, whatever you use to. I like to work for forexfactory.com, but whatever is good for you, as long as it's an updated economic calendar, it's great. So, for example, all right, how do we trade it? You have 3 kinds of events, all right? You see events that you have the hour. Right now, I put it on GMT time because I don't know, we have many clients from many parts of Europe, so I don't know where you're from. But the hours that you see here are set by GMT time. If you're from London, GMT +1, Mid-Europe, GMT +2, Eastern Europe, GMT +3. So just check where you're from in order to set the clock. And then you have what currency does it affect? Where does the event comes from? From what country? Where does it take place? Okay, and then we have the impact. Okay, we have the description of the event, and as you can see here, we have previous, forecast, and actual. You see, and you can check a graph and detail and so on. So the hour is pretty easy, right? You set it by your hour. Right now it's on GMT time, so I'm getting the GMT time for when does the event take place, at what time. Okay, it's very important because we have to prepare our account and our charts before the event takes place. So we have to know the exact second when the information is published. Currency. What currency does it affect? We're going to talk about, in just a second, we're going to talk about correlations between assets, correlation between different currencies, if it's the same correlation, if it's an opposite correlation. For example, as you probably know, the XAU, gold and US dollar, works in opposite correlation. When gold goes up, when the dollar goes up, gold goes down in the opposite. So we're talking about, we're going to talk about correlations. So we have the currencies here. We have the impact, the importance of the event, and this is a very, very important thing. Okay, a lot of traders are not putting a lot of attention on this one. If you look on investing.com, you're going to see it's going to be marked by bulls. Okay, if you see one bull next to an event, it means low volatility expected, which means not such an important event. Okay, the next stage will be two bulls. If I see two bulls marked by two bulls, it means modern volatility expected. We as traders, because we want big movement, you know, in a very short time, we want to look for the three bulls, for the very important, for the high volatility expected. High volatility, if we recognize the direction of where the asset is going, okay, we might make a lot of profit there. So we look for the three bulls, or in Forex Factory, what we look for is the red ones. You see these ones? Okay, painted red. Yellow is low volatility or low impact expected. You see on orange medium, and the red ones are high impact expected. These are the major fundamental events that we want to trade on. So we have the hour. We have, in this case, affects the US dollar, what currency it affects. Okay, we have the event itself, which we can click here and get all the information. And then we have the previous, last time when this event took place, what was the result? Okay, what was the report? And then we have the forecast, what we expect that will happen, and the actual number. Okay, so before we trade, let's take, for example, tomorrow. Okay, as you can see, this is tomorrow, GMT time, Wednesday, June 27th. All right, so we have a lot of information, and we want to look for the red ones. You see the events on Forex Factory. If you used to trade, a lot of traders like investing.com better. Great. Just look for the three bulls events, okay? Or full star if you look on itrader.com on our website and you trade through the economic calendar. So looking at these events, we want to look for the ones marked in red. Okay, for example, this one, goods order. Okay, of course, at any number, you see the forecast is 0.5%. All right, increase by 0.5%. Of course, at any number, on the actual number, exactly at 12:30 GMT PM GMT time, any number that will be higher than 0.5% should be supportive, bullish. Okay, you should see the US dollar goes up. And of course, any number that, if the actual number will be lower than the forecast, we expect the US dollar in this case to get lower. Now, you have the options to buy or sell, so we can make money both ways, right? All we need to know is to recognize where it goes. Let me give you an example. Let's go. This is today. Yesterday, we didn't have anything, right? Monday usually. And then we had Sunday and Saturday weekend. And on Friday, we had, here is a great example. With you, I'm doing it live, right? June 22nd was Friday, 12:30 GMT time, which is 1:30 London time or 2:30 mid-Europe time. Okay, check your local time. We had core retail sales in Canada and the CPI, the Consumer Price Index, all right? Okay, now the expectation was that the Consumer Price Index, if it goes up, all right, it should be supportive for the Canadian dollar. We expected an increase of 0.4%, and actually what we had at the time of the publication is an increase of 0.1%, which is lower by 0.3% than our forecast, all right? Core retail sales, we expected increase of 0.5%, and actually we had minus 0.1%, which is 0.6% difference. We expected an increase and we had a decrease of 0.1%. Now, let me ask you guys, traders, according to this information, to these reports, to these two events that took place exactly at the same time, what do you think exactly at the same second to the CAD, to the Canadian dollar? Any guesses? You think you went up? You think you went down? If we have bad news, is it good for the currency or bad for the currency? All right. Of course it's bad for the currency, all right? And we can see the reaction. If I'm going to the US dollar versus the Canadian dollar, put it on half an hour chart. Okay, this is Friday. You see the US dollar CAD went up, which means that the CAD got weaker for half an hour. We're talking about only half an hour, and then we had technical correction. Okay, so it went up a bit above the resistance line and then went back down. You see, we're talking about, if you would track the trade, we're talking about open of 1.32 all the way to the high price of 1.3381. We're talking about 100 pips, guys, right? Let's check it again. Open price 132.81, highest 133.81, exactly 100 pips. Okay, so if I'm taking an account of $10,000, you could trade with, you could take 20 lots, and then it's 200 Canadian dollar per lot. Profit of 20,000 Canadian dollars in a few minutes. Not that bad, right? Pay off your mortgage, some of you. Okay, so this is how we do this, and let's go on. So okay, here is the fundamental checklist that traders can follow. Okay, first of all, understand the event. Why is it important? Okay, when we see an important event marked in red or 3 bulls, what I want you to do is I want you to click on the event itself and just read the description. Okay, it's pretty easy. It's very, you know, it's in English. All you have to do is just click on the event itself and read the information about the event. What does this event mean? If the number that we see on the actual is higher or lower than the forecast, what does it mean? It actually tells you. Actually, these websites like Forex Factory, Investing.com, and our website, and all the, I would say, big economic calendars, they actually tell you what the description of the event is and how it might affect the market. Okay, know which assets are strongly correlated. This is very important. You got to understand, first of all, it tells you, okay, as I showed you, on every event, what currency does it affect, all right? Let me give you a few correlations that you can write down. The XAU versus all major currencies, gold, okay, works with an opposite correlation, especially with the US dollar, but also with the British pound, with the euro. Think about gold is a huge parking lot, okay, against all currencies. When we have a lot of uncertainty in the market, a lot of tension, it doesn't matter if it's geopolitical tension, so any other tension. If we have tension in the market and we expect the currencies to go down, especially the US dollar, we expect gold to go up. It's this is one of the assets that we call safe haven. Okay, safe haven is where big money, okay, I'm talking about billions of dollars is going when the currencies are going down. Okay, so we have an opposite. You know what? Let me show you. Let me go to the MetaTrader and actually show you how it works. If I'm taking the dollar versus the Japanese yen, for example, on a daily chart, so you can see here the dollar went down and then it went up. If I'm going and checking gold, I'm going to see exactly the opposite. XAU USD went up and then went down, all right? So opposite correlation. It works on half an hour, it works on a daily chart, any interval of time you're going to look, you're going to see that. Okay, oil, for example, okay, Brent oil and crude oil are correlated with the oil currencies, which is the Norwegian krone, the NOK, the ruble, and the Canadian dollar as well. These are countries that are major exports of oil, for example. We have on our platform Exxon and Chevron, which are two big American companies that are producing oil, okay, affected by oil prices. So we have correlation between the currencies and, of course, with stocks as well. So understand the event was important. Know which assets is truly correlated, because you want to trade on the right asset. And it tells you actually on the description of the fundamental event itself. If you click on that, it actually tells you what it affects. And pick 3 assets to follow before the event publication. All right, don't take only one asset, but choose 3 assets that you believe that are correlated. In order, I say it every webinar, and I'm going to repeat it again. A smart trader is one that knows how to diversify his portfolio. You don't want to put all the eggs in one basket. You don't want to take a fundamental event with a big movement and trade only on one asset. You want to take 3 assets at least, okay? So if one will go against you, you have the other to cover. And of course, you can use a stop loss. You can set the level of risk on any trade that you take through the MetaTrader, okay? I'm not going to show you right now because we don't have time for that, but ask your account manager how to use the stop loss, all right? Where to put the stop loss, and then you decide what is the risk level you would like to take on each trade that you take, in order for you, that if the market goes the bid against you, it keep you on the safe side. And of course, on the other hand, you want to use take profit. It doesn't matter if you want on the long position, if you bought, or you want on the short position, if you did sell. You want to take profit, and to understand, to build a strategy to know at what point you want to get off the trade. Understand how the event can impact the assets, of course. What is the current market sentiment? Optimistic or very volatile? Okay, read the news. You can check the VIX index. Okay, the index of fear, we have it on the MetaTrader, VIX. Okay, check the sentiment. Check if the market is volatile or not. Check if any events are taking place before and after that could influence price movement, because you don't want one event to affect, for example, the US dollar, and then to have another event 3 minutes or 4 minutes or 15 minutes later that might affect the currency. So, right, because if we have one event that affects the asset, and then we have half an hour later or 1 hour later another event that might affect the currency, it might, interfere with your trade. So check the events, look at the calendar, and of course, per asset, check support and resistance levels. I told you at the beginning of the webinar, a professional trader is one that knows how to combine the fundamental trading that I show you right now and technical, all right? Put support and resistance levels, put some key levels, put some lines on the chart. You can draw on the MetaTrader to understand the highs and the lows. It's going to help you with your stop loss and take profits, to understand at what point you want to go in the trade and at what point you would like to get off the trade. All right? Be ready on the financial calendar to receive actual results. Okay, don't trade. A lot of traders are doing the mistakes and the trade before. They open a position before the information is even published, and then it's a gamble, because then you don't know where the market is going. Wait for the information. See the reaction of the market. Be patient. Okay, we're here to trade smart. Be patient. Use stop loss. Protect yourself. Okay, it's your money. You work for it. Right? Protect yourself and know when to go get off the trade, or manually, or if you use take profit, it's great. Trade the report based on the new information, okay? We trade always, you have to understand, the capital market, guys, is based on expectations. You want to trade on the difference between the forecast and the actual. No more than that. What the analyst, what the market believed that will happen, what was the expectation, and what really happened. Okay, the difference is, and as high the difference is, it means that our trading opportunity is bigger. Okay, these are the things you would like to trade on. You want to trade on the difference between the actual, exactly when it's published, okay, so you have to be ready, and the forecast, as I showed you on the calendar, all right? Most important, never try to be faster than the market, okay? I just said it in other words. Don't open a trade before, okay? It's just a gamble. You might lose your money. You don't want to do that. Wait for the information itself, and, wait for the information itself and then trade. Traders are also recommended to prefer their accounts. Of course, if you want to take, you have to understand these fundamental events with impact, okay, affects the market strongly. So you're going to see big movements of prices. You want to have enough margin, including margin checks and take profit expectations. As I told you, enough margin, enough funds in your account in order to trade. First of all, to diversify your portfolio and trade a few assets, and then lower the risk, because if you have more breathing space, if you have more funds in your account, it means that you have more breathing space and that's a great thing. Any report on any asset can be traded on the previous instructions, as I told you. Some reports are considered more volatile than other. Okay, for example, interest rate decision, the NFP. I'm doing specific webinars talking only about the big fundamental events, but just for you to know. These reports deserve more margin requirements and wider stop loss and take profit limits because of the reason that you have to understand that the big fundamental events, the biggest one in the market, like the NFP, interest rate decision, and so on, we expect higher movement, okay, a higher movement of the prices of the assets. So you're going to need to work with a bigger portfolio and give yourself the limits can be on lower and higher points than usual to take profit in the stop loss. Traders should also consider their approach to the time frame, short, long per trade. Of course, you want to start, you want to look at the daily chart. Okay, mark some lines to understand. If I trade the euro versus the dollar, for example, I'm going daily. I'm pointing here. Here is a resistance. Here is another support here, and the price right now we have another support and resistance. Okay, and then I'm getting the chart, so I know the highs and the lows of any event. And then you could go down to 4 hours. Let's go live, and then 1 hour, and then set a new resistance line, new support line here, and then we have a setup, okay, of the highs and the lows. And of course, good luck. All right, guys. This is in general how you trade fundamental events. You can find more information talking to your account managers. Just technically to show you how to register to the next webinar, all you have to do is to go here under education, and click on news. Under news, click on webinars, put in your first name, last name, in your email address so we can contact you back. I'm going to be here next Tuesday, just like every Tuesday at 6 p.m. GMT time, at the same time talking about the next topic. Of course, if you have more questions, you're more than welcome to email me or contact your account manager to ask. Okay, fundamental events, big part of trading. Know how to combine it with technical events. Be smart on your trades. Use stop loss and take profit. Put limits and trade smart. I would like to thank you very much for participating in this session. And hopefully I'll see you here next week. And thank you.